Hey everyone, in this video, I'm going to bring you one growth stock that's down 58% off its high that I think you might regret not buying on the dip. But before I reveal what the company's name is, I'm going to share with you its cash flow from operations, its operating profit margin, its valuation, and then I'll reveal what the company name is. The reason I do that is not because I want you to stay tuned throughout the entire video. I know you can scroll straight to the end, but the reason I do that is so you can get an idea of why I'm recommending this stock, what it is that I like about it, why it's a bargain at this price, right? Not just, oh, okay, here's a name and go buy it. So let's get right into it. Starting with this company's cash flow from operations to sales, it generated a very healthy 24.16% cash flow from operations to sales. After several years of dipping in this metric, it rebounded and is coming back strongly. I will say something here. This company is strongly dependent on the Chinese economy. So as the Chinese economy's reopening gains momentum here in 2023, this company's revenue, cash flow, profitability will do better. Now, this reopening has so far had a slow start, but it's picking up steam. I thought the momentum would start earlier in the year, but I'm only noticing it starting in the middle of the second quarter onward, right? So some of the companies that I follow in the region, including Alibaba, including Nike, Starbucks, Apple, they've in the first quarter their sales didn't really recover as the economy reopened. Only later on in the second quarter was there some noticeable signs of that economy increasing, and this company is also going to benefit from that trend. Let me show you its operating profit margin here, and a similar trend. It was moving downward and then it's recovering again since 2020, recovering up to a 14.45% operating profit margin. And this metric again should continue to increase as China's economy rebounds. One of the areas this business generates a good deal of revenue is from advertising. And when people are stuck at home, advertisers are not spending as much money as when people are out and about and the economy is reopened and rebounding and recovering. People are going out, buying stuff, traveling, experiencing things, and that creates an increase in demand from marketers who want to reach out to these customers and say, hey, come to our business, come to our restaurant, come to our coffee shop. And so they want to get the word out. But when people are stuck at home, no need to advertise to them, or less need to advertise to them compared to when the economy is reopened. Finally, the last reason I'll give for why I really like this stock is because of its relatively inexpensive valuation. This is trading at a forward price to earnings of 13.36, which compared to most stocks is relatively inexpensive, especially when you consider its excellent prospects going forward in growth businesses. This business operates in search engine, in streaming video, in cloud computing, artificial intelligence, and all of those areas that are growing rapidly. You're paying a very reasonable valuation for that type of business. So what is this company's name? It is Baidu, ticker symbol BIDU. Baidu, the Chinese company. I know what you're going to say. There is elevated risks because it's a Chinese company. The government has not been very kind to businesses in that region, but I believe that's one of the reasons why you can get this stock at this reasonably inexpensive valuation. This same stock, this same business, had it been in the US, had it been a US business, the forward price to earnings ratio would be much higher than 13. I would say it would be much higher than 20. So you're getting this stock at a significant discount because it's operating in a region with those elevated risks. So in my opinion, those risks are priced in to this cheaper valuation. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.